Welcome to this seminar on mid-market businesses, and thank you all of you again for coming this morning. As a law firm, our focus is on mid-market businesses, private companies, owner-operated, family businesses, sometimes subsidiaries of foreign companies, and we help them throughout the stages of their growth with the complexity that comes with success, helping them in commercial transactions and agreements, and also commercial real estate, succession and strategic planning. We have a nimble team, and we like to consider ourselves a strategic partner with our clients. And part of that outlook involves finding out, of course, what's on the minds of business owners, what's keeping them awake at night. So we had the idea in 2018 to survey business owners of the mid-market segment of the economy. Let's start with the uncertain trade environment and regulatory change. I think it's hard to look at any newspaper or website about news and not notice that trade is a constant and fluctuating topic in our present environment. It seems like the rules of trade are being rewritten. The new rules are not yet settled or clear, and businesses, of course, have to compete and thrive in what is an uncertain and changing environment. So my first questions are for Mike. Mike, your company exports a lot of furniture to the U.S. market. How have you found the changing trade environment affecting your exports?
We've been exporting to the U.S. for 40 years, almost 40 years. So we started pre the free trade agreement, and we've enjoyed the free trade agreement. And now there's all this turmoil around this new free trade agreement, the USMEC, I believe it is, that is just appears to be a rewritten free trade agreement. So in our world, the free trade agreement is still in place. There has been no change up to this point, and we don't anticipate a change if they can get the new agreement written. The uncertainty comes from, will it be signed? Will it be pulled out? What do we do? How do we anticipate? At this point in time, we're feeling the only uncertainty around it is whether it's going to exist or not. But as it turns out right now, it's business as usual. And I know that most people would like to hear me say, oh, it's a tumultuous situation, but we haven't found that to be the case in terms of our export. We're a manufacturer here. We export to the US. We have a market there. It's been a market for a long time. The brand is strong. So it seems as though there have been no issues. Where there might be issues around the trade thing, maybe over the last 5 to 10 years, where we hear, which people don't talk a lot about, the expression "made in the U.S." We're only going to buy American product. That's out there, and when it happens, and we're put in a situation where we have to fight that. Where a client will say, well, I'm only buying U.S. Especially when they're private, there's not much we can do because private corporations that buy our furniture have no real choice. But when it's a public funded situation, we actually work with the Canadian government and go and write letters. You know, we had a situation in Columbus, Ohio many years ago where there was a courtroom and it was during the election time, so the whole American thing came up. And we worked with the consulate in Cleveland. We wrote a few letters and we ended up overturning it and we got the job. So I think it's important for us to stand up to a free trade agreement when it's there. If it's there, it's an agreement. So we started talking about, well, you know, Ontario does more business with Ohio than Ohio does with Ontario, and we did the whole argument, and we were successful. So that might be one of the areas.
Given that Buy America theme, Mike, have you ever thought of locating some production in the U.S. or?
We haven't. We've looked at it. We've gone down there. I've had associates in other industries of mine that have gone down there. It's difficult. I think it can be difficult. You hear about, I had a friend who transferred a chunk of his business in manufacturing kitchens down to Alabama. And although he had all these incentives to locate in the area, and they were trying to generate jobs, which they did, they had trouble with the local workforce showing up to work. So every area has its issues. So I think that Toronto, which is where we're based, has a very strong workforce. We do pretty well, although we're probably getting to talent succession later. It's more difficult. But we've found that This has been a very, very sound place to do business out of. The supply of local materials and the suppliers that feed us is pretty strong here in Ontario, and we buy a lot of locally manufactured product for our product, and so it's worked out. Over the years, the Canadian dollar is one of the things that, when we look at trade and trade uncertainty, if we were going to look at anything, it would be the currency. For us, we're an exporter, Rick's an importer, so our issues are extreme opposites. But for us, it's fantastic when the Canadian dollar is a little weaker. The $1.10 a few years ago was a trickier place to operate out of. In fact, it was rather frightening because it happened so quickly. I think every business can adapt over time, which is why we're starting to build our exchange contracts over 3-year periods now, just so we can lengthen that runway of preparation. But where it's at right now is very comfortable for us, and so operating out of here it levels the playing field in many ways. And although we don't give away the currency when we market, because we have proprietary product, which I think is one of the ways to go to the export market, is not on a commodity basis. When we talked, my introduction talked a lot about design. We design our own product. We have proprietary rights to them. We manufacture them here, we create them, and then we export them, and we sell them at market rates. We don't go to the market and say, oh, this is a Canadian product, we can discount it 25% now, that's why we've got our market. We work very, very hard over the years at establishing our brand at the highest levels of price point, so that any fluctuation in currency could be absorbed rather easily, and when it's a little weaker, we do very well, and when it gets stronger, we have to absorb a little bit more, but it gives us the capacity to do that.
I can add to the tariff thing.
Sure.
Like as they said, we're kind of opposite in our business. So we're importing products. So tariffs can be a big issue. We import a lot of our products directly from China or Taiwan or somewhere in Asia, so that's not an issue. But there are a lot of our brands that bring products into the U.S. and then want to bring it into Canada. So they're getting hit with duty, they're getting hit with tariffs. And again, if it's about a 10% tariff, they can still absorb that and be profitable. Once it goes up to 15 or 25% tariff, it's not manageable by them anymore. So we've been able to circumvent that by taking products directly from China instead, get a better price, make more margin on our end, because the savings that they have, they can share with us. We've also used it as an advantage, strategic advantage in the marketplace. We're actually targeting vendors right now that actually sell directly to Canadian retailers that are based in the U.S., so they're bringing products in the U.S., getting hit with these tariffs. And again, at 10%, it's fine. When it's higher than that, it's an issue. And we said, I know you like to work directly with the retailers, but as a distributor, we can actually take this product directly from China, make a distribution margin, and still give you more margin and manage your stuff locally in Canada. So it's actually been an advantage for us to create
So
more
you're finding
business.
an opportunity to divert trade basically from the U.S. to Canada,
Right,
to help your suppliers.
yeah.
Ed, is this something you come across in your business? I know it's a software business, it's different from hard goods.
Yeah, we're professional services, so we do sell about 10%, or 10% of our revenues come from the U.S. And right now, the big advantage for us is twofold. One is the currency, as you're saying. It's been pretty good in terms of the way we've got some of our long-term contracts benefiting from where the currency sits at. The other one, which I think we've discussed before, is really about the regulatory environment that relates to immigration. The world of 2019, it really is restricting global movement of individuals into the and because of that, there's an awful lot more tech people who are actually available in the Canadian market from overseas. So whether you're coming from India, whether you're coming from China, whether you're coming from Eastern Europe, whether you're coming from South America, it's been beneficial to us in terms of it being able to attract and retain talent, because you can't get that visa in the US that you used to be able to get. So for us, especially in the Toronto area, in the tech market in Toronto, this has become one of the global centers for basically really strong talent migrating to this country. The vast majority of our staff come from Canadian institutions and Canadian universities, but one of the things that we found is that we've been able to find great talent in Brazil, great talent in Eastern Europe, some folks from Southeast Asia that have come in as well. And I got to say thank you to Mr. Trump for that, because it does make my life a little bit easier.
That's an interesting insight that the hardening of the U.S. position on tariffs and immigration is creating opportunities for Canadian companies to draw talent and products directly to Canada.